This is a market review for February 13th, 2025. Today we had PPI news at 8:30 in the morning, and again, Trump speaking tentatively, which didn't end up going against the market, in my opinion. Don't exactly know what he said, but as you can see today, we were extremely bullish. This is what I expected, given the last 2 days were super low volume. I was expecting a run up above these highs here. Now down to the hourly, you kind of see my bias here. 2 o'clock, London starts, we're playing bearish. 4 o'clock, we're starting to play bullish, right? So I'm looking for for New York to continue that bullish price action. That aligned with the higher time frame bias of it being Thursday, when we had a discount opening on the week. So we've already taken our sell side objective. Now it's just time to expand. We had an SMT of these highs here, which was another reason, another signal that we would retrace off of this high here. And something that I've realized is that SMTs do signal a switch in delivery. However, if your bias is wrong, and if the switch of delivery is not in the direction of your bias, it is most likely just a retrace. So pairing SMTs with your setups is great, but you need to make sure that your bias is correct. Going down to the 15-minute, again, it's another SMT here that's against our bias, but which ended up playing this retrace right there. As far as inefficiencies go, there aren't any on the 15-minute. We can see price reversed at 10:30, 10:45 as we get close to London close. Lunch continues that move. We spike down to today's first presentation, and then we expanded up out of that for the entirety of PM session. Now on the 5-minute, you can see this SMT of these highs created this bearish candle here. So market opened, rallied up, created this SMT. Then with this SMT, we retraced all the way down into this one. Well, it's also a 5-minute fair value gap, but for our purposes, I marked it on the 1. So that retraced, and then we played an expansion, which is where I found my entry. Took out this high, retraced, super unconvincing sweep right here. We swept and immediately came all the way down. You'll see it better on the 1-minute, but that caused such a large retrace, which ended up taking me out at break even, which is unfortunate because price continued all the way up here. My final profit was up here, so I wouldn't have been missing out on much, but still missing out on some, which is okay. So price expanded, took out this high, retraced, closed within the 5-minute, even though it did come down here. Wicks do the damage. The body closures tell us the story. Closed within the 5, still playing bullish. Up, another 5-minute created after taking out this high. Tiny retrace, perfect. Now I do not believe, yeah, that's not equilibrium. That just shows the strength that price had in AM session. Because with this sweep, it did show intent to continue higher, which is why we had a smaller retrace. If we had a sweep and then immediately came back down, kind of like here, I would expect a deeper retrace, a deeper into this 5-minute here, because the rest of this is balanced. So The lowest it would go, in my opinion, would be here, possibly this order block right here. So then after this 5 minute, reacted up one more time, create an SMT of these highs, and then reverse at 40, 45, around 11, which is where London closes. Lunch actually continues that move, reacting off this 5 minute. Oh, definitely not. Reacting off of this 5 minute here, kind of went horizontal for a little bit, took off again, and then we hit first presentation, which is where price reverses. Now, the reason that it reversed here is one, because it's below equilibrium. Could we have reacted here? Yes, we could have. But, in my opinion, PM session, whether it's still during lunch or not, likes to take out a low before continuing AM session's move. So I think even though this right here is below equilibrium, kind of just wanted to spike it down here, not only to take out this liquidity, but to fill in this first presentation once again. And if you look at how it racks off constant encroachment, that's almost perfect. And then obviously another bullish expansion from there. Now you can see better. Market opened, we rallied, created this SMT here, which caused this deep of a retrace into this 1 minute. I do believe, yep, into this 1 minute. The closures are very close to constant encroachment. So let me run through why I was even bullish on this trade. So I'll go why I was bullish, why I entered without an SMT, and, well, why I put my stops where I did. So first, I'm bullish because not only is the higher time frame direction pointing that way, because we opened this week low, so we already took out that sell side objective. Tuesday and Wednesday were relatively low volume, so I was expecting a high volume day today, high volume directional day today. That on top with us already completing the sell side objective, we're likely to just reach up with the buy side one. Two, London, right? London started bearish, reversed to bullish. So when London reverses, New York continues that. And after this expansion up here, I was expecting a retrace. Because it is unlikely for price to move like it did on Monday, where it would just London reverses, starts playing bullish, and then New York just straight continues it. It usually retraces before it continues the move, which is why I was waiting for this SMT down here. So higher time frame bias covered. The reason I took it without an SMT is because of this fair value gap here reacted off of constant encroachment. Sign number one. Expansion reacted off of this fair value gap, closed perfectly above the low, gave a rejection off of this candle, validating this inverse. So the second we closed above here, I'd put my limit order at the top of the fair value gap, the inverse fair value gap. And I put my stop at constant encroachment of this sell side wick right here. I'm going to get rid of that because it doesn't have any effect today. So I put my stop, constant encroachment of this, which didn't end up actually being needed. Price took some time to get out. So why did I take it without an SMT? My bias has been correct for the past, it's been correct a whole lot. And I've seen many times in the case where London reverses, New York expands, and then it retraces. Once it retraces, if it hits a valid point when there's nothing lower to sweep or to fill, because the retrace that New York does before it continues the direction that London sent it is always to internal liquidity. So here, it is never sweeping external like here or here. And since this fair value gap right here is the only gap and there's nothing lower, I wasn't worried about price continuing lower than here. So in my mind, that solidified it. Another reason is how price closed here. Well, how price closed at constant encroachment and how price closed the bottom of this 1 minute. So all of those things convinced me to enter. So I entered here, expanded, stop at break even. My first profit was up here because it's not going to be exact. I'm just going to eyeball it. I usually shoot for at least a 1 to 2. So my first profit would have been here. However, I like to anchor it on points of liquidity, which would be highs or lows. So boom, we stick it up there, which is a 1 to 2.9. So I could have taken fulls there and been fine. But I thought it would expand higher, so I put my finals there. What ended up happening is came up, rounded. For some reason at 10:02 we had a weird spike up, taking out this high where I got half my position off and then immediately closed right below it. This, when I tell you that this made me want to close the trade, whenever you see something like this where it sweeps, where price sweeps a previous high and then immediately closes below it or has some significant rejection, it is unlikely to continue that move immediately. It might retrace and then continue it, but it's unlikely for it to just straight continue it, which is why we see this retrace. We see another kind of spike down right here at 10:07, which did unfortunately take me out because my stop was at break even here, which was this high. So with this spike down, I was out. Price did round before constant encroachment and of the 5 minute, and then we expanded higher, ended up taking out the full profit anyways. Mind you, all of this was in the macro, right? The price action, this expansion here, inverse fair value gap reaction, expansion here, down, out, that's all within the macro. Expansion above this high, hit this, like I said, it was looking like it was going to continue expanding. If we compare this high and this high, see how it sweeps and immediately closes below. Whereas this one, right, we go up, little retrace, that's normal for candles to close off of their high. And then but we still closed above it. We closed above it and continued, right? Continued up, showing strength, retraced to this because after liquidity, things usually retrace to allow people to get in, or smart money to get in. So it retraced here to this 5 minute as well as this 1 minute. And then we continued up higher one more. There was an SMT of these highs, but technically there was an SMT with this high ever since like this high got broken. But if we take that into consideration with what time it is, 10:45, 11, things tend to retrace what AM session did. So it goes horizontal for a little bit, and then we finally start going, break down, fair value gap reaction. This is a 5 minute. 5 minute fair value gap, constant encroachment. Another fair value gap here, reacted off of, boom, down. Now we're in lunch, looking to attack sell side or internal sell side. Retrace up to this 5 minute, continue lower, take out internal liquidity. That was our goal. In my mind, that was our goal for lunch. So we took that out, kind of just went horizontal from there. And then before the algorithm kicked back in at 130, price wanted one more sweep of liquidity, so it took out lunch lows with this single candle here, tapping into first presentation, continuing higher. I believe this is that's not a 5 minute because that's anchored there. This acted as an inverse, boom here, rejection, continued all the way down here, so validated in my opinion. Price stayed in here. Price did come all the way down here. I would not have liked this as a trade because my entry would be here. My stop to feel comfortable would be a constant encroachment of this wick, and that's a huge stop loss in my opinion. So I wouldn't want to take that. But I also wouldn't have liked price action here, so it's another reason. But reacts off this first presentation, expands, retraces, expands again. With this kind of expansion, the fact that this candle also continued up with no sell side wick shows strength. Entry could have been here, would have been a little risky. Another expansion, price retraces to this order block twice. Expansion, fair value gap, expansion, fair value gap. Below equilibrium, right? Below equilibrium. I don't believe this one is. No, but this is all balanced. So it's the closest thing to it. And then we end up taking out this daily high over there. And then retracing off the high, which is there. As far as the rest of the week goes, meaning Friday, if we look on the weekly time frame, I am definitely looking for a TGIF retrace. So on Fridays, price usually retraces 20 to 30% off of the weekly move, right? So if we do it now, that means price is likely to retrace to 99.40 or 922, right? So somewhere within here or even lower, but I'd like to look for at least 20% for that. So what does that tell us? That tells us that whatever overnight does, because from the looks of it, it looks like overnight might pump a little higher. I'm expecting London to then reverse and then to play bearish on Friday. Friday AM session. My target for the week to close would be that 20%. 20 to 30% would be the reach. Where it closes, I don't know. Might close lower than that, might close higher than that. But what I do know is I am looking for a retrace tomorrow. When that retrace happens, because it could happen overnight, it could happen during London session, in which case I'm looking for another expansion in New York session. Again, it all depends what London gives us. With that being said, this has been your market review for February 13th, 2025.